Alright team, what's going on everyone? Welcome back to the channel. If you're anything like I used to be, you're probably tired. Tired of the endless scroll, the constant hopping from one trading strategy to another, searching for that holy grail that promises consistent profits. Well, guess what? The holy grail isn't a strategy. It's your ability to stick to one. And today, I'm going to give you the one trading strategy you need for 2026 and beyond. This isn't just another system, it's the Fractal model. This is a simple, repeatable framework that you can use on any market, any asset, and any time frame. It's built for consistency, designed to cut through the noise and help you finally achieve that breakthrough in your trading journey. So if you're ready to stop strategy hopping and start seeing real results, stick around, because this video is for you. Understanding the foundation, swing points. At the heart of the fractal model is a fundamental truth about price action. Price cannot reverse without a swing point. Think about it. If price is in a strong downtrend and suddenly wants to go up, it must form a bullish swing point first. Conversely, if it's been soaring upwards and is ready for a downturn, it'll create a bearish swing point. Our job as smart traders is to identify these crucial moments. We're looking for these swing points to form at specific locations on our charts and, critically, we're watching for certain candle closures that signal the shift. Once we spot these confirmations, we can anticipate powerful expansion candles that follow, those big, decisive moves that offer incredible trading opportunities. Step 1. Establishing your daily bias. The first and arguably most important step in the fractal model is coming into the day with a daily bias. We need to know which way the wind is blowing on the higher time frame. How do we do this? It's incredibly simple. We look at the daily candle closure. Continuation closures. Bullish continuation occurs if today's candle closes above yesterday's high. It tells me price is strong and likely to continue higher. Bearish continuation occurs if today's candle closes below yesterday's low. It signals weakness and I'll be looking for price to continue lower. Reversal closures. Bullish reversal occurs when price dips below yesterday's low, but then aggressively closes back above that low. It's a classic rejection pattern, showing price has found support and is ready to reverse higher. Bearish reversal occurs when price takes out yesterday's high, but then closes back below that high. This is a rejection from resistance, indicating price is likely to reverse lower. Once we have this daily bias, we have our directional conviction for the day. This is our North Star. Step 2. Identifying intermediate structure and points of interest. With our daily bias firmly established, we now move to an intermediate time frame, typically the hourly or 4-hour chart. Here, we're looking for structure and the formation of a swing point at a point of interest. What are these points of interest? They are key levels where we expect price to react. Fair value gaps. Areas where price moved rapidly, leaving an imbalance. Previous highs or lows, significant turning points. Order blocks, specific candle formations that often precede strong moves. Once price reaches one of these points of interest, we wait for specific candle closures to confirm our swing point. Candle 2 closure, a specific candle pattern that signals a strong move away from the point of interest. Candle 3 closure, another powerful candle pattern indicating continuation or reversal. Step 3. Lower time frame entry, the confirmation order block. This is where we get surgical with our entries. We use a lower time frame for execution while maintaining alignment with our higher time frame bias. If our swing point was identified on the hourly chart, we'll use the 5-minute chart for our entry. If it was on the 30-minute chart, we'll use the 3-minute chart. On this lower time frame, we're looking for a change in the state of delivery that confirms the swing point from the intermediate time frame. However, we don't enter immediately on that change. We wait for confirmation. Specifically, we're looking for a confirmation order block. This is a series of candles that form a strong move in our bias direction, often after a small retracement into a point of interest. Our execution plan is simple. Entry. We enter on the close of the candle that forms the confirmation order block. Stop loss. Our stop goes on the protected low for longs or the protected high for shorts. Target. We aim for a minimum risk-to-reward ratio of 2R. This ensures we're taking trades with consistent profitability. Now let's look at the chart example on gold. We always start from the daily chart to determine our bias. On the daily time frame, what do we see? We see continuous candle closures closing through previous highs. This immediately tells us that price is delivering higher, so our bias in this scenario is bullish. Now, what happens next is very important. The following candle sweeps the previous day's low and then closes back inside the range. This is what we define as a candle 2 closure. On top of that, this reaction is happening inside a fair value gap. Now our confirmation step. If candle 3 closes above candle 2's high, then we are prepared to trade candle 4 for continuation. As you can see here, candle 3 does close above the previous candle's high. At this point, our daily narrative is confirmed, and we are ready to look for continuation entries. Now we drop down to the 1 hour chart, which is our intermediate time frame. The daily chart gives us the bias, and the 1 hour chart gives us structure and expansion alignment. On the 1 hour time frame, we allow a few candles to print so we can read price properly. Here, that a low is swept. Do we immediately get a textbook C2 closure? No, but instead, what do we get? As shared in my previous video, look closely at candle 3. Candle 3 closes above both candle 2 and candle 1. This represents a change in the state of delivery. We now have a confirmed swing point low validated by CISD. This confirms that price is ready to deliver higher in alignment with our daily bullish bias. With both our bias and intermediate timeframe structure confirmed, we now move to the lower timeframe for execution. Our lower timeframe is the 5-minute chart. On the 5-minute timeframe, what do we see? We see a swing point forming inside a fair value gap, along with a continuation order block. This gives us a clear area to execute a long position. Our entry is taken on candle close. Our stop loss is placed below the low of the execution candle. Our target is a fixed 2R. Why do we enter on candle close? Because price does not always retrace. Waiting for retracements can cause you to miss the move entirely. Candle closure confirms intent, and we let price deliver. As you can see, price continues higher and our take profit is hit cleanly. That's it. This is a mechanical way to trade the markets. One model, one narrative, one execution framework. The fractal model works on any market. You simply need to understand candle closures and align them with higher timeframe bias. No indicators, no guessing, just structure, bias, and execution.